Hi, Ron, and welcome to the new week. We're right in the middle of August now. Typically, quite a quiet session. Obviously, the main news this week is tomorrow's inflation data from the United States, the CPI data at 12:15 UTC tomorrow. So we'll obviously be live for that market moving event tomorrow. There's still another reading in September before the Fed next meet on the 16th and the 17th of September. But it's looking more and more likely that the Fed will be cutting rates at that meeting. But obviously, lots of water under the bridge before then, no doubt. The chart I've got here next to me is the daily gold chart. Big down day so far today. We were looking quite positive last week. Remember, we'd been breached the 3,300 level, and we ticked up following the big rise on Friday, non-farm payroll day, the big surprise revisions in non-farm payrolls. Now we edged up all week, had a good Thursday, give some back on Friday when we got to that key critical psychological and technical level at 3,400. And then we've declined. We declined significantly today and over the in the early hours this morning on obviously the toning down or the stepping down of the geopolitical tensions with Trump announcing, which is what we got here as well, late on Friday, Trump announcing that he will meet with Putin. Putin is coming to the United States, if you like, but it's in Alaska. So very much sort of home territory for Putin as well in that sense. But they will meet on Friday, so it's scheduled face-to-face, Putin and President Trump. Zelensky is not being invited at the moment. He's talking about needing to be there, obviously. If you're going to talk about carving up Ukraine or trying to give territory to the Russians that they've taken by force, you'd expect the Ukrainians to be involved. He said, Zelensky, understandably, after 2.5 years, 3 years of conflict and bitter fighting and devastation to his country, and obviously lots of people losing their lives, they're not prepared to give up territory. And he's still talking about Ukraine as well as Crimea as well, which was annexed by the Russians back in 2014. So anyway, that's taken the geopolitical tension down a tad. Obviously, as ever, especially with Trump, the devil will be in the detail. Watch actually come, but really, the dollar hasn't gained much today. Dollar's under pressure again, and gold is down on that news. So they're both down. So dollar's off a bit, and gold is down significantly here. On the hourly chart here, you can see across under the 20 period moving average here earlier this morning. I haven't traded any of these. I haven't seen any of these. I came in earlier this morning around about 7:15 and so that's interesting. We took some short trades on the 15-minute time frame. We'll have a look at that in a minute. If there's anything, guys, remember the session today is really all about live trading. So we're going to have a look at the markets before the markets open, the indexes, half an hour before, see where they are. We plot our highs, we plot our lows, and then see what actually happens at open. There's not a great deal of data today. In fact, I don't think it's particularly anything to be writing home about on the data front. So we should have a relatively muted start to the. I haven't got my calendar up. Why isn't my calendar working? Just bear with me a second. I'll come share the calendar with you in a minute. For some reason, it's decided not to work. But yeah, all one. We got retail sales out of the UK later on today. That's deemed a high impact or high-ish impact event here. You can see this is today's data for the main market movers. Holiday in Japan, Mountain Day today. Very environmentally aware. Our Japanese friends. Some weak inflation data from Italy. And retail sales out of the UK. That's the only real bit of news. Some treasuries getting auctioned off this afternoon in the United States. So saying nothing going on. It's all really focused on the main event of the week, which is let's just show it. As I said it before, the PCI data, the core and the headline PCI data. But more on that tomorrow. This is what the headlines we'll be looking at. If this gets back to 3%, which it might well do, the headline number 2.8% from 2.7% is expected. This gets back to 3% plus. Yeah, there'll be some finger wagging back from the Fed saying, look, we told you so, the impact of the tariffs, but they're only just starting to take a hold as well. And these seasonally adjusted, non-seasonally adjusted data as well is obviously quite interesting as well. But we'll review all of that tomorrow. I say today we're just going to do some live trading. So, guys, Kula, yes, I am the Stuart 7 that's on Discord. That's me. That's where I put my stuff. Cooler, here we are. This is our Discord channel, guys. This is the general chat box. So I've just put us up live in 10 minutes. Here we are. These are the links. So yes, absolutely. And my end of I do lots of different types of trading. But what I share here with you guys is under the trading strategies tab here. I'll put on most nights. I've been a bit lax last week. Trades I've taken on an end of day basis. So these are basically not intraday trades, but end of day trades. Today we're going to look at intraday trading, but there was 2 from Friday night that I'd posted up last night before the market opened. I think these are both certainly out the money. The Aussie might have, I think the Aussie stopped out actually, 95.60. I'm pretty sure that's been stopped out. And I'm not sure about the yen, but we'll have a look at that as we go on. As I say, I put them up most nights. It got a bit cluttered this recently, but here we are. These are the sort of things I was put up last week. We were long. Here we are. So I tend to go for 30, 40, 50 pips, 60 pips, depending on the type of asset. Usually, mostly Forex. I do the odd index. I'll put gold up occasionally as well. Very rarely Bitcoin. It's the only crypto I trade that I put up on here anyway. Anyway, and we've had a really good first 6 months of the year. July was positive as well. And I think we're in the money for August as well. I will have to update all of this. So come to this channel, this point, Cooler, and we'll have a look at that. Cooler's saying, what's he saying? Can you check Euro USD? I took small sells, made like 2%. Very good, Cooler. And that's the way to think. Think in percentages, not making, this guy's here has put 50 pips. I put the pips up and the points up, but think in percentages because, the way I trade is very much percentages. I count it in points and pips because it's easier to explain. But from a mindset point of view, if you're thinking about I've made $100, I've made $50, I've made $50,000, thinking in dollar terms, whether you're winning or you're losing, has a bigger impact on your psychology than thinking I've made 0.5%, 1%, 2%, 1.46%, or whatever it is. So the key thing, and all these things I share here, when this stop loss, these are the numbers. So the difference, the distance between the entry point and the stop loss, the amount of money I'm going to lose if that goes wrong is always round about 2%. So I tend to have a fixed, it varies a little bit. Sometimes it goes up, sometimes it goes down, depending on how many live assets I've got trades. So I tend to have a maximum of 12, 14 trades open at any one point. So I obviously cool the risk per trade down quite significantly on some of them. So some of them move much more. And again, it depending on the asset. So some assets move really a lot of pips. So if you're counting in points. So pound yen, for instance, this one down here, just using this as an example, that moves on many, 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 many more pips than the euro pound. That's 2 really good examples actually there. So the euro pound tends to be really, really range bound. I mean, we've been up to 0.87 recently for euro pound, but typically it's quite tight range, whereas the pound yen is all over the place. But certainly cooler. We'll have a look at euro. In fact, let's have a look at it now because you've asked for it. So that's what we're here for today. And we'll still be ready for the opening of the cash session, which has a big impact, obviously, on the stock indexes potentially, but not always. Remember, today is the start of the week as well. So it's the first opening trades of the week. So any news, any gossip, any things that have happened since the close on Friday night, traders, investors, hedge funds, insurance companies, banks, anybody who wants to get in the market in the US, the stock market, the futures market, the commodities market, the actual physical futures market, options market, they don't open yet. So they are all sort of opening in the next hour or so. So Let's have a look. On your, I trade SMC like sweeps and boss and all that, but I started trading like 1 or 2 months ago. Okay, Cooler, is it Cooler? Lua. It's really what if this were it's I mean SMC's become really really popular over the last few years. It's very effective for many people. I know a lot of people have tried it and got burnt by it. Like any new thing, any new strategy, it's not the strategy or the approach that makes you money. It's your personal psychology. It's your personal risk management. Like this guy here, I don't know who he is, but he's posted this FitSkier. I mean, might never ever hear from him again. I mean, this is a nicely successful trade. Yeah, 20,200, whatever it is, gains. Yeah, that's great. 90 pips profit. That's fantastic. But can you do that day in, day out, consistently? Can you do it, week in, week out, month in, month out? How often are you going to trade? Are you going to trade every day? Are you going to trade every week? Are you going to trade every Tuesdays? Fit it into your lifestyle, Cooler. And if this is working for you, fantastic. It's not an approach I take, I use. Sorry, can't see your comment. Oh, there it is. It's up. So yeah, if you've got that, if you understand these pivot points, these turning points, the idea of stop loss sweeps and all the rest of it, fine, excellent. Make it work for you, because the devil, as I said before about Trump, the devil's in the detail, and the devil's in your account at the end of the month or the end of the week. Depends how you analyze it. But every trade you do, every particular position you take, make sure if you lose, you're only going to lose a small percentage of your account. That's the trick, okay? Because in this crazy business, unlike anything else we learn in our lives, you can get this wrong a lot of the time, much more than you win from a number of trades point of view, but you can still make money from it. A 50-50 win rate, so winning 5 trades out of every 10 you take, you can still make money. Most businesses and most jobs, if you were getting things right 50% of the time, you get sacked, wouldn't you? Imagine a doctor getting his diagnosis right only half the time, or somebody working in McDonald's getting his burgers right only 50% of the time. You wouldn't still be in a job. In this crazy business called trading, you can make money by getting things wrong just by flipping a coin. Flip a coin, heads or tails, win or lose, and that's the other outcome. Don't overcomplicate it. What a lot of people find Cooler, I'm talking to you directly as well, with SMC and the sweeps, is that people don't hold their patience and their discipline. They run with it a little for a while, and then it doesn't work for them, or they get overconfident. It's all these sort of things are the things that trip you up. But if you're new, you're 1 to 2 months in this business, fantastic. I mean, you can make money very, very quickly. So the best of luck, my friend. Okay, so last week when euro was falling, I took like 11 trades and won 9 of them with a risk ratio of 1 to 3. That's excellent every time. But after the news, it's not going good. Okay, well, that's what happens. We get this, 9 wins, 9 trades out of 11. That's fantastic. That's a massive hit rate. Risk reward 1 to 3. That's fantastic as well. So you're very, very much in the money. The point I'm making is that might impact you think, oh, this is really easy, this trading lark. I've won 9 out of 11 trades. I've got a risk reward ratio of 1 to 3. This is easy. I'm following the rules. That's great. And that's fine. But how do you deal with it when you have the losing streak? What if it was the other way around? Okay, what if you were getting 2 wins out of 11? You had 9 losing trades. Your risk reward was 1 to 1 or 1.5, or it was much less than that. So it's dealing with that, and it's having the patience and discipline to stick to a plan that works. Because again, I know lots and lots of people with winning strategies or systems that work for a little while, and then they'll start tweaking them because they're not winning enough as they see it, or it's starting to lose too much. Nothing works forever. SMC will probably still be around in 10 to 15 years' time. It just might, be tweaked. It'll have changed. Markets change all the time, but people don't change, and that's the key thing. It's all about managing yourself. It's all about risk management and managing your emotions. So anyway, great to interact with you. That's great news. I'm happy to explain that. Kula, again, I'll just ask you a question. If you'd had the reverse of what you just published up there, your 9 winning trades out of 11 with a risk reward of 1 to 3. If you'd had 2 winning trades out of 11, would you have been as keen to write that down in public? Okay, that's what I'm just asking you. So don't let your initial success. And I'm not trying to sort of deride you at all. I mean, that's fantastic results you had, but don't get too ahead of yourself either, because 1 or 2 months in this trading business is, as you said, you're a beginner. So, but if you can accept that and don't get too greedy, don't get too scared. You've got a fantastic life ahead of you, because it is, anybody can do this wherever you are in the world. And I don't know where you are. I obviously don't know anything about you. You don't know anything about me. But the best of luck, my friend. Okay, so let's get back to the charts. Where are we? I'm up here. I was talking about gold, wasn't I? Yeah, so the hourly chart sort of triggered short here into close basically on Friday night under its 50-hour moving average in early trades this morning on that news I've just been talking about. Trump and Putin meeting in Alaska. Yeah, journal. I didn't mention that as well, but yeah, absolutely. Yeah, write it all down. I've got this is not a journal as such, but this is a calendar. This is my diary, my trading diary. It's just notes of what's going on, noise that's going on. But write stuff down, and then when you got a quiet moment, analyze everything. So excellent. You got a very good teacher or approach, and you're following them and stick to it. Don't get cocky. But also, when you have your losing streak, because you will have a losing streak, we all do. Don't get too down on that as well. Just keep going. It's all about persistence, consistency, and process, and see why it doesn't work, or why it works at some times and not other times. Why it works. Sometimes there's crazy things. I had a big thing for years about pound CAD. Every time I think I've told this story many times, but over about a 6-month period, because I was only trading end of day. It didn't come up very often on an end of day basis. But I think over 6 months, I think I had 6 or 7 consecutive pound CAD trades that all lost. And I just thought after the third or fourth time, next time pound CAD came up, it was always, I always get this wrong. But it's just working your way through that. It's a mind game, guys. It's an absolute mind game, this business. But anyway, 10 minutes to the cash open. There we are. You're 19. I've been wanting to make it like this is life-changing money. Excellent, my friend. Well, keep it up. The very best of luck, and manage your emotions, manage yourself, because that's fantastic. My father is 99, and he loves staring at the screens. He loves staring at the charts as well. So again, this is absolutely anyone in this business. Anyone can learn to do this. It's about sticking to your principles, and if you've got the discipline and the patience as a 19-year-old, you've got a very bright future of you, my friend. So keep in touch, stay in touch, and the best of luck. Okay, you can make lots of money just making 1 or 2% per trade. Lots of people. The other thing, lots of people get pulled into this gambling and trading, gambling mindset, where people think I've got to make $1,000 on this one particular trade, when you should be making just $10 or $50 and do it multiple times around this one big blowout trade that's going to save. And obviously, the big blowout trade 9 times out of 10 never wins. So anyway, keep it up, my friend. Yeah, absolutely. That's yeah, but don't let that become over. Don't pressure yourself. I've got to make 2%. I've got to make 1%. Remember, it's the losing weeks and losing days that impact your brain, your psychology more than the winning ones. When you're winning, the different chemicals are flying around your body to the ones when you're losing. Well, similar chemicals, they just affect your brain differently. So just think about that. In I don't know if you're a cricketer, but we've had a fantastic we just had a fantastic series, England against India in the summer here, and 2 quite young teams, the Indian team younger than the English team, but what emotions those sports guys have been through. And so think like sportsmen as well. Think about this as like a performance business, and keep yourself in peak condition, particularly mentally. So anyway, my friend, best of luck. Let's go back to the chat. You asked about euros. So let me just finish the story on on the gold here. So I got in again. This is not what Cool's been talking about his ways. These are the old-fashioned ways that work for me. I know a lot of people are very critical of them, especially SMC traders. The moving averages that are too late, they're lagging, and all the rest of it. And all of that's true, but they work. It works for me, and I'm not going to knock them here in public. And you're more than welcome, Cooler. I love light bulb moments, and you feel like you've had a light bulb moment at your at 19. So absolutely best of luck, my friend, and keep in touch, as I say. So 7 o'clock this morning, we've been consolidating here. Big candle down, remember, means more action. Well, it didn't happen. That was the 2 o'clock candle. Sideways for an hour or two. It's like sideways for about 5 hours. And then here at 7 o'clock this morning, the European traders get up, also sell it short. Didn't quite break the low of the day as it was there. The low of the day had already been put in there. But look what happened at 7:15. We had a big down candle, and we put in the new low of the day. So I'd entered there, and I've been short all morning on this one, in and out on this. I mean, look, the green candles, few and far between, but they're quite significant. So we might see some upside. This line here, the way it says T1, was from an old trade. So I thought, perhaps that is going to be an area we got to. And that's, in fact, where I closed out early this morning. It's still short, this. We haven't gone back over the 21 moving average. The 5 and the 9 moving averages here, the green and the orange line, they haven't crossed back up again. So we're still long. MACD signal line here has flattened out. ATR. So ATR is a really good indicator. Gives you the average distance this asset you're trading has moved in the time frame that you're trading. So every 15 minutes at the moment, the gold is moving at the moment. So you've got the ATR there. It's moving $5.7978, which is quite a move for gold. So every 15 minutes, doesn't tell you whether it's going up or going down, but on average over the last 15 candles, which is what this is showing us, the average true range for 14, the average distance over the last 14, 15-minute candles that gold has traveled is $5.75. So we can easily see this this level here, this T1 level we've got here, tested again to the downside. The trend is very much set for gold today. But if we go up to the higher time frame, you see why it stalled where it did. And that's because on the daily time frame, the 50 and the 21 exponential moving averages are all sat there round about where we are now at 3, 3, 4, 5, round about there, to give or take $1 or $2. But there you can see that's where we've stalled. So it's a big down day. Is the momentum to the downside over yet? Who knows? We'll see. Christian, any trading activity on gold? Let's have a look at. Well, it's short, Christian. I know we talked about this over the weekend, but it's still short. There's the 15-minute time frame. I'd have been short there and say that's a big candle rejecting. Remember what candles show you. The body of the candle is the distance we've traveled in the time frame of the candle. But remember, wicks are rejection of either higher or lower prices. So what's happened here is we've moved up for 2 candles and then moved down quite significantly. We've rejected going over the 20-day moving average. So if I was short this, I'd have my stop loss here at the 20 period moving average and still be short, basically. But here, the question mark is, this was a key level. Remember that T1 level from our daily time frame. So we've ran to it already. We've already moved this distance today. So is there any more depth in it? So if that is if 5.75 is the distance we move in 15 minutes. If we go to the daily time frame, what's the average distance we travel on a day for the gold market? Well, it's $46.8. Can you see this? So the ATR, the last 14 days, the average distance, i.e. the price has moved between the open and the close, is today. It's coming down. See here, back here, it was $86 a day. Now it's $46 a day, give or take. See there, $47.60. So how far have we moved already today? Well, we've given up 3,400. So if 46 is the average distance, we've already moved to nearly $50. So we've already exceeded that, haven't we? So there may not be any more momentum down as we've already hit this support level. Maybe, maybe not. No indicator, no strategy will tell you exactly what to do. But at the moment, today, exactly now, the gold remains negative. Why am I saying that? Well, here, the 15-minute chart, the 20 crossed here, it's been short all day, all through the European session, into this US Open. It's been short. It might all turn around. The Americans might suddenly decide, something will happen, we need to buy it. But at the moment, it's down. 5 minutes go down another time frame. Bit more detail, bit more waviness in it, bit more rejection. Here we've gone to the 50 period moving average, 50 period moving average. That's the green line. The red line is our 20 again. So, but here you can see up and down, up and down. So this is congestion here. We've got a sort of a box forming, if you like, at this low. And I would, as I said before, this dotted line here from the first of a target from the first to the seventh. That's obviously the last time I traded gold here on this, or marked on this chart. Is going sideways. So what's this telling me? Well, that's telling me here on this 5 minute time frame that's rejecting going under this key daily support level. So this is support. We need to break through this zone here where we are now if we're going to continue to go lower. At the moment, but just the market can't decide what's happening. We're in sort of balance here from 12:30 here. This is the first low of the day. There we are. So from 12:35 to where we are now at 14:25. So for the last 2 hours, we've sort of just been going sideways. So here, you'd be waiting. And that's the key thing with, I wanted to insert a chart, was there? I was going to put a box in, wasn't I? I'll do it another time. Anyway, ignore that. Sorry, just escape. So we're here, 5 minute traders are waiting. I'd be waiting for a break of this level, but biased to the downside, Christian, basically. So I don't know if there's going to be any opportunities, but anyway. There's lots of questions. Let me share this with everybody. So Christian has also asked, any expectation for tomorrow's CPI? Maybe Trump influence on the numbers since the fired ahead of the PLO. I try not to guess or predict too much. As I said earlier, Christian, the calendar. Many are talking about tomorrow's CPI. This will be the one that like Main Street, the normal newspapers will drill down on the headline number to 2.8%. If this comes in at 3% or 3% higher, as I said earlier, the members of the Fed, those that are saying, well, I told you tariffs were going to be inflationary, they'll be saying, I told you so, wagging the finger a bit. If this comes in under where it was last month, that's, Trump will be singing it from the rafters of the roof of the White House, whether he's changed the roof or not and paved over the Rose Garden, whatever it is. The detail for nerds like me will be in all this detail here. So the core CPI, is it going to be back over 3%? This is the key one, the core number at 3% as well, because the core strips out all the things that move around more in a more volatile basis. Remember last week here in the UK, the food inflation was running at like 4.5% last month. Really, really strong, really, really high. And that's really what ordinary people, suffer from the most. People whose wages are getting a bit squeezed, still got to eat, still got to feed the kids. And so it's things like that, away from the bubble of Washington or London or, the trading platforms. It's the ordinary people that are suffering potentially with this stiffening of inflation again. So watch this core number tomorrow and the headline 2.8%, but this 3% rise is anticipated because this is what's expected. If this goes to 3.2, 3.3, there'll be lots of if it's under, I say, as with the headline, if it's under this 2.9 or in line at 3 or 2.9, things say, oh, well, there we go. We wait for the next one now. We wait for the next non-farm payroll. We wait for what the Fed are going to do in September. But, the chances are now they will move regardless unless some of this data gets really strong. Obviously, as we said last week, the trade deals, if you can call them trade deals, are getting done. Somebody was saying last week, like 27% or something of the world's GDP has now got a deal with the Trump administration. So it's not as bad as we thought in April, which is why stock markets have come back. And so, yeah, watch it all tomorrow. Try not to predict, react, and then act accordingly. We were supposed to be trading the open today, weren't we? But anyway, there we go. There's the opening bell. Whoops, what happened there? There we go. Gold's bounced up. So euro, dollar's probably weakened. Stocks might have opened weak. Who knows? But there we are. You see what I was saying about the 5-minute time frame? Wait for what's happening. Obviously, this is the main event of the day as far as events are concerned. It's the open of the US. We're back up. We've up and we're rammed right into that 50 period. So with this downtrend now, it may be open. See what I was saying before about this level being the low? We've rejected it. So that would have been what some technical indicators, what some robots would have been doing. The algos would have seen all this as well, seen this rejection. So this becomes a key level today, that low there that was rejected at 3344.74 here on our charts. Can you see that? Can you see that? I don't know if you can see that very well, but that's the rejection. Okay. Would it be better if my head was smaller? You see the chart look any bigger? Let's make me smaller. Doesn't make the chart any bigger, does it? Let's see. I think you can see what I'm talking about. So yeah, that's quite a buying opportunity. But we can't do anything until this 5-minute candle completes. We go back to the 2-minute time frame. Remember, those of you with standard accounts, those to take trades 2 minutes before and 2 minutes after major news. This isn't major news. This is just the open of the day. So 2-minute traders, you see this low here, there where it went under that T1 level, was bought back quite quickly as well. And then the other indicators here for the 2-minute trader would have been that this low is lower. This pair here is lower than that low, and it's lower than that low on open. So buy. So we would have gone long here on this there at so this 2-minute chart here for gold. Having been short here, would have gone long here. I'm just talking about this particular setup. Other setups will have a different impact. But that would have gone long there at the open. So at 232, we'd have bought that at 3,353. My stop loss initially would have been down here at 3,349.62. And we're in the money. Where were my initial target? Well, there's obviously some resistance there. Look at that. So I want to be out when we get to that 3,357, at least some of it. If we get there, we may not get there, but we're still in the money from that opening trade. And this 50 period now on the 2-minute time frame may provide a bit of support. Obviously, it's volatile, so that's just a short-term thing. But I'd be looking to get out of that. Certainly, close some of my position at 3,357.30. Simply on what those candles are telling me. That's all. Nothing about the news. I'm not listening to any news. I'm just literally talking to you now on that. The RSI is positive. The MACD is positive. We had a cross also on that. That's another reason to buy that and that. Okay. So let's just use this as an example. Let's look at the different layouts that we use here on gold and see what others would have, or our other setups would have said. So our pivot point, which is basically the VWAP and the Heikin Ashi candles, but 2-minute candles. Again, big. Again, remember the rules of trading. Heikin Ashi. There's the big bodied candle here at 232. So the first one we'd been short here, then out because it was going short. But that was a short. Didn't work out. That would have been closing that short, and that would have been a long. So we would have been long here from 54. And when we'd have got out here if this is closed as red, so that would have actually been a losing. So it's come back down there on the Heikin Ashi candles. Load layout, another one. Demo one was this is it's a bit too choppy for 2 minutes. What this setup is saying, stay out. Because why is it saying stay out? Well, our moving average adaptive, the MMA is flat. So we've been very volatile here. And although it's saying, short there, long there, it did say long there at 230. The flatness of the purple line here would have kept me out of this. I want the line to be moving down like we've got here. Flatness means a counteractive volatility. So we're trapped in a range there. You can see that a bit better on this particular setup. So if we, where's the box gone? Where's my box gone? Channels. Oh, dear me, brain's gone to fudge. Where's my box? It's gone. It's here. I can't find a box. Anyway, sorry, let me just draw some lines. I can't find a box. Where's the box gone? Anyway, so let's do it with the raise. That's here on this strategy. You can see that a bit more clearly there, and that's what this strategy is telling you. So that strategy is saying at the moment stay out because of the flatness of this. It hasn't decided where it's going yet. We've been down, but it's also suggesting the move. Remember what we said about the ATR? The move down maybe over the day here. So we had the initial burst here on open, and it's come back down. So that one's staying. Perhaps stay out. MACD and SAR, a bit slower, so this will probably have gone maybe, in fact, the other way. No, so the parabolic SAR here, actually it's 5 minutes, not 2 minutes. Let's go to the 2 minute. So again, that would have gone long, actually, right on 230 here. And again, it's a bit like the crossing moving average. So that would have got long there at 3,353. Didn't get to that target level there, but it's still long, this one. You stay in it because it hasn't flipped yet. So we're long. We're still in the money because we're up here at 3,354.20. So that's gone long there a little bit. And we get out when the parabolic SAR flips to above from below, or we get a cross in the MACD signal and signal and MACD lines here, the orange and the blue lines, but that's still positive down at 2 minute. That's still positive. So that's in, and we're still holding on to that at the moment till it flips. It's a bit of a delayed reaction, so it might not be the best of one, that on the MACD and SAR, but that's still long. Another one is the Bollinger Band and stochastic. This is a mean reverting type system. So again, we look at the same asset on the same time frame. What's happened here? Well, that would have gone long. In fact, that's gone long there. This one has gone long here at 14.16 there. That's gone long there at that point there. Gone against us, but we're still with a target to the midline. So it's gone long there. You'd have taken half your position off here. Is the rules at the midline. So you've got a little bit there. So you've got in there at head of the open. The open hasn't. Well, it has helped us eventually. So we got in it 14.12 at 3,351.80, and we'd have got out in a completion of that candle at 3,353.21. So what was that? A couple of dollars to the upside, half of our position, or you could have closed your whole position if you just trading to the midline, and then the other half, 80 or 20%, depending how you're trading it. The rest of your position when the price touches the outside Bollinger Band. So you're still long with half of your position, or 20% is the position, depends how you're trading it. Gold on this strategy, the MACD and stochastic crossing strategy. But again, that one, interestingly, has crossed from above to below, but hasn't gone down. So there we are. We've just got a successful close of that second half of that position as we speak there at 3,356.52 as we've hit the outside Bollinger Band. So there, see what's happened there. So we got in here at 14.16, and we got out here at live as we speak. Didn't make this up, guys. At where are we? 14.40. So whatever that is, 20 odd minutes. A successful long gold trade there with the MACD. The Bollinger Band and stochastic set. Let's go back to our default setup, which we were on initially, weren't we? How's that looking? I think it's probably come back against us, hasn't it? Oh no, there we are. So we're still good to go. That's still positive. There's our long position there on the 2-minute time frame. Remember, as we got to the 50. So that 50 now for 1, 2, 3, 4, 5, 6 candles now. So 12 minutes. That has now provided our new support. We've got to our previous high here from 2 o'clock and from 1 o'clock. I'd be happy to close out that position now on the short-term basis because we got to target. It looks like this. The flip side is, do we get out completely? Well, I'll close half because the US is open, London's open. This is the meat of the day. It's Monday. It's quite quiet usually on a Monday. There's not a lot of data to move this. But I would have closed half of my risk now because we got to that previous highs from earlier pre-market open. Remember, we'd have done all of this before the market's open. Remember what we were talking about in the 5-minute time frame? We had those consolidations at that lows. We'd already hit our daily support, the 20-day and the 50-day low area. We'd already hit those. So there we go. I'll come to all your questions. Loads of your questions there, guys. So thank you very much. Cool. You've asked for euro dollar. Yeah, I'm sorry. I'll concentrate on gold, haven't I? But there we go. So half of my position will be closed at this point here, having got in there. And we'll come to, so let me just put it on the chart for good. So that would have been my target area through there, which we've just closed out. Thanks very much. And my stop loss would probably now round about the midpoint, and this is how the strategy is. So my stop loss now would be down here on the second half of the position. So I can't lose. My stop loss is going to be around there on the 9-period exponential moving average. And we're still long. Okay. And these relative, I mean, obviously this is only 2-minute time frames, but these 4 candles here, these are quite strong up candles. You know, they were quite strong down candles before it ran out of steam here. So we may be running out of steam here, but we are pushing higher. People might be buying at these highs and getting moving higher. So I'll keep my stop loss trail tightly behind it, and probably might even, you know, if I'm scalping, I tend to move it up a bit aggressively just to lock in the profits more and don't try and give them away. So it's would definitely be here and possibly at the bottom of this candle at 356.22 as we go forward. Right, let's have a look what else you're looking for. Sorry, guys. Christian, I want to ask, can I stick with just the prop trade like people say this new prop firm and should trust it? Guys, it's up to you. You know, understand your instinct, understand your basic instinct. You know, if you think it looks right, feels right, we sound legitimate. We have been around a long time, all of us here at the prop trade. There are an awful lot of scammers out there, Cooler and everybody else. So, you know, if this is legitimate. I'm real. The bosses are real. You get paid. You've seen all the payments. You know, we got to start. Everyone's got to start somewhere. We've been in business since October last year. We know what we're doing. We want you to be successful because you tell your friends, you create your own affiliates, you create your own partnerships. You bring more trade to us, you bring more business to us, and we grow as a company. So, yeah, there we go. Do so. It's up to you, my friend. Obviously, it's your money, your decision. But, you know, ask your family, ask your friends about us as well. Yeah, we do the best with the spread, Cooler. You've never seen anything like this before. Well, there we go. I'm here to help. Okay. Right. You've asked about Christian. I'll come to the Fed in a minute. This all looks like yeah. Well, fair enough. Absolutely. You know, video's lagging. Is it okay? So let's have a look at the euro. Yeah. I mean, some people say it's too complicated for them. It's really up to you. But yeah, if you've been trained and honed in the SMC way, I completely understand that. And I say if it's working for you and it keeps working for you, absolutely all the best to you, my friend. This works for me. Has done for years and years and years. Lots of people are very critical of it all. But, you know, I'm happy for this strategy. It makes me money day in, week out, month in, month out. No, not every month, but most months. So, yeah, it's what works for you. So let's just flip to something else. Let's flip to the euro, the majors. The euro. where are we? Well, what I do is what's going on. So let's just go up to let's come back again. You see this? Yeah, that's the thing we were talking about before, congestion. And you see that's the where's the 230 candle? Again, this is euros. It's, the highs are getting a bit higher. There's obviously a wait and see box here. See the box again? The RSI is rising, the ATR is rising, the MACD is rising. Just sound like gibberish, all this, doesn't it, Kula? But that's how I swing. So this strategy would have been long here, got short, long, short, and it would have triggered a final long there at 1440, and then I would have added here on the 1442 candle. So I'd definitely been in here. So I'm long this strategy. If I'm trading this manually, would have been strong here. Why have I got in on that candle? Well, because we've created a new high. Look at that. See what's happening there? We've been coming down all since 12 o'clock, and we bottom there, we dropped there, and that's our floor. Can you see the floor? Hopefully you can. But remember, with Forex, it can move very, very quickly when there's news around. So be careful. Certainly careful with the Forex. So there's the box we were showing you on the gold range, and it's a matter of being patient and just waiting for the big move. I mean, this looked like that here at 1334. Can you see that there? Let's zoom it up. Yeah, let's zoom it up a bit there. See here, this looked like that was short. So and it is still short because we hadn't gone back over this red line. Ticked up a bit. We didn't cross the green and the yellow lines haven't crossed. Another big short here. Shorting opportunity. I probably would have added, to be honest, I would have added very much, again, if I've been trading this, I would have added a short at this point because we've been short for all this time. It's a big positive candle. We didn't go below the first attempt, so the second attempt didn't work either. So I would have been out of that quite quickly. So that would have been a losing trade. Looked like we were going long, but not really because the candle wasn't very big. I'm waiting for another big candle. Next big candle is this up one. And look what we've got now. We've got three areas of support here at whatever this is, 116, 115, 5. So again, the fives come up a lot in trading, Kula. A lot. You see lots of targets at 000 or 550 or 25 or 35 or 55. That fives play a big part in this. So we're in this channel. That looked like that was going to break out. It didn't again. So that's the first attempt at the top. So there's the top once, twice here, really. That's our third attempt. So we're waiting for a breakout. That looked like, again, I would have traded that long at 1442 at this price here. We broke out of the channel, so I got long there. But immediately, within 2 minutes, it stopped out because we've crossed lower. So this, to me, is now screaming. Now that the not the open frenzy, but the open of the cash market is now in play. That is not doing anything for me. So I'm a bit bored. I'd be a bit bored with this. It's not actually doing much now. So I'm out. Thanks very much. I'm not doing anything else for the rest of the day, I think. We'll see. A support with the green line, the 50-day moving average, I'll tend to go long again, which is sort of what's happened here as we've gone into the 20s as well. So I thought, maybe tempted yet, but I need some more. I need some more information. Okay. So that's the euro here on the 2 minute. If we go up to my real trading time frame, which is the where my real value is put, this is still relatively long. What happened last week? Well, we went from 114 on the Thursday and Friday last week, previous week, not weeks just closed, the previous week, the 31st, the last day of July, and the first day of August. We had this big old rally because of the weakness of the non-farm payroll data Friday the 1st, and then the rest of the week we moved higher. We moved all the way to 117 and then couldn't hold it, rejected it. We were down on, we were up on Thursday, but a very small bodied candle. So that's inconsistent. It's balanced. The suppliers, the buyers and the sellers are in equilibrium. So we got an equal small candle. We got equal height of the wicks to the north and the south, and then on Friday we edged lower, and then we're sort of edging lower today, as we just said, but we've edged into this key 20-day moving average. So it's not a lot of action going on Thursday, Friday, and today. And that's, a lot of that is it's August. There's players around. We're waiting for CPI tomorrow, really, for a bigger candle day, like the last big news day, which surprised. So we'll see what happens. So overall, the higher time frame, the daily time frame, is sort of neutral-ish. But biased to the upside. Neutral-ish because the RSI is right here on the 50, which means, again, in balance, we're neither rising or falling. It's very flat. My MACD has moved down. The histogram is still negative. It just turned positive from Friday, last week's move up, but again, it's flat. And the volatility, the ATR, has descended from 98 pips a day down to 88 pips a day. So it's still moving 88 pips a day on average over the last 2 weeks. But still relatively high compared to earlier in July. But it's sort of range bound. So there's nothing to get too excited about on the higher time frame on the euro. So if we step down the time frames, the 4-hour trader would have been long, and now he's looking to go short because that's crossed out. There's that congestion. First signs of weakness. First time we've been under this big red line for a long time, since the 1st of August, that breakout to the upside. So is this a move lower? If it is, we'd need to go into this 116 area. That would be the targets for the 4-hour traders. If this candle, when it completes in a minute, in fact, that is complete, isn't it? That has completed. So that would have triggered short positions. Is that 10 o'clock? Is that right? 10 o'clock? Yeah. So that has completed an hour ago. So this is our current candle. You see it's very flat. So perhaps more weakness to come, or this is just a punch under and then we're going to go back up. But at the moment, it's weak there on the 4-hour. The hourly traders, as we said, had been short today from 8 o'clock this morning. So the European session, we turned short euro dollar. We'd been long in the Asian session a little bit, but again, a rounding top. And again, you see the high we got to this morning at 5 o'clock, 6 o'clock, when I was just waking up, was below the highs we'd got to in the start of the Asian session. So a similar pattern, we moved up higher, but it was lower. So that was a suggestion we may have running out of steam. Didn't know that yet, but the short position would have been placed there on the completion of the 8 o'clock candle at 9 o'clock, and then added to here at 12 o'clock, because we breached this support area during the Asian session. It takes us back into last week as well. This is sort of the 8th Friday's low as well. So that's hence added to there. So there have been an initial short there. More position risk taken on there at the 12 o'clock candle, and it's running lower. Whether we get to 116 or not today or not, I don't know. We'll see, but that is still short. Stop loss up there somewhere now, around about the 50-hour, 20-hour moving average at 116.51. So that's euro for you, Cool. I hope that's answered your question, Christian. What is Fed going to probably do if jobs keep plummeting and inflation stays at 3% or even rises higher? Yeah, well, that's really the jobs thing, Christian, is, it could be explained by this big crackdown that the ICE have had, and the Homeland Security have had on illegal immigrants, or call them illegals, the horrible phrase they use. Not working, getting them out of the country, but they've captured lots of legal migrants as well, legal people with genuine asylum claims as well. It's all very, very messy in the United States, but politically, it's action, and it plays to Trump's base very well. So some were saying, I was reading over the weekend again, some were saying, a 75,000 number for non-farm payroll going into the second half of this rest of the year wouldn't be such a big worry because of the this the number of jobs that it still could hold up productivity. The issue is obviously the relatively still unknown impact of the tariff. So that's why tomorrow is so vital. If there is a sign, and again, remember the tariffs only really clicked in last week. And somebody's got to pay them eventually. I know Trump's been spinning this. We're collecting trillions and trillions of dollars. Blah blah blah. They're paying us. Well, yeah, but somebody's got to pay for that. Whether it's businesses, whether it's consumers, whether in the United States, if they want these goods. If they don't want these goods, they'll go and find them from somewhere else. They're not immediately going to get made in the United States. It's all not happening that quickly. So there will be an impact on prices. There's got to be. Simple economics 101 tell you that, or shows you that from history. But again, the data will be proved correct or otherwise. So on that point, they will have then got baked into a corner. And again, it becomes they become an easy stick to be beaten with by the administration, that they didn't move quickly enough to cut rates. So let's see what happens. But if inflation does go up, they will be proved correct to have stalled and to have held rates to where they are. So anyway, looks too complicated. Yes, you can trust it. Cooler says Jatin. Jatin, thank you very much. Cooler, Jatin, yeah, I will. Yeah, Jatin's been around a while. My battery's just gone a bit flat, it's saying, for some reason. Oh yeah, my battery's dying, guys. I've got no way to plug it in at the moment. So guys, I'm going to wrap this up if you don't mind, because the battery's gone quite significantly in my laptop here, because I can't split that power cable at the moment. So let's have a quick run up. Let's have a quick look at some of the other markets for you. We've looked at gold and euro, which is what everybody was asking about. So today you can see dollars a wee bit stronger. You can see this on the euro on the hourly chart. Sterling 134.20 we're down again for sterling into the 134 zone. So moved up last week, moved up in the Asian session, and dollars come back a tad here. Indices. Let's go through them. The Dow. A bit slow. We've been positive this morning. Positive start. We were strong into close on Friday, and we're giving up some of our opening gains here on the Dow. The Nasdaq closed at an all-time high. Nasdaq, not the Nasdaq 100, but Nasdaq 100. Nasdaq closed at all-time highs on Friday. Had a strong close for the Nasdaq, and that is holding up better than the Dow. Dow's been under quite a lot of pressure from Eli Lilly in particular last week, and Caterpillar. But as you can see here, the Dow and the Nasdaq nicely bouncing off its 20-day move. So we're still long this position on here. And the most important of all, S&P 500, 6,394, just shy of 6,400. We closed on Friday really positively, and we're all in the green at the moment also today. So again, above its 20-hour moving average for the S&P 500. We'll have a look at gold, quick look at energies and crypto. Obviously you can trade this over the weekend, but be careful, guys. We had a strong move over the weekend on all the administration chatter. So we did get, as I've been saying for a while, we did get to the through the key 20 up to 120,000, 22,000, so 123,000 was in the charts. Remember what we were saying on Friday? This was looking quite positive on Friday. Had a good last week. We broke over the 20. It wasn't on Friday, but a good move up through the 20-day moving average on the 7th, and had a good day yesterday, and through that key level there at 118,000, a new all-time highs on the horizon for Bitcoin. So the move down was positive in the end, testing lows, testing this 112, which had been previous resistance, is now support. So off we go. So thank you for your time, everyone. I'll see you all again tomorrow for the CPI data. If you haven't got an account with us, why not? We're very straightforward. Hopefully, these sessions demonstrate that. And whether you're using one phase or two phase, guys, I don't know what how you trade. Jatin, Kula, are you two phase? Are you standard traders? Are you pro traders? Say the Express account, the one-step approach starts from about $40 or so for a $5,000 account, $55. If you're new 25, first account with us, new 25 gets you 25% discount. So for a little over $40, you get $5,000 worth of equity. The bigger accounts that allows you to trade not more risk, but well, it is similar risk levels, 1 or 2% again. Always about the risk, but the value is much, much bigger. So for $130, you get a $25,000 account. A $50,000 account will cost you another $100, $250, but you got twice the equity. So our most popular is this in the one-step challenge is the $25,000 account. You need to target 12% to move to your funded account, not losing more than 7% and 4% on a daily basis. When you have your funded account, remember the rules still apply. You're looking for a daily loss of maximum of 5%. You don't want to be anywhere near that on a daily basis. If you're losing 4 and a bit percent on a day, not quite got to the 5%. Have a break, go and cool down, see analyze everything you're doing. Similarly, if you're making 5% on a day, also cool down. Also, go and analyze what you're doing, and just don't get too carried away because maximum loss 7-10%. But once you do that, once you've got your funded account, once you've traded it, and remember these are simulated accounts. It's not real cash at the moment. But once you've done that, once you've hit the target or a target that you're happy with, and remember there's no target with the funded account. 80% of the gains you've made on your $25,000 account or your $50,000 account or your $10,000 account, 80% of those gains will be yours. You can apply for it every Friday. We verify who you are. So, we need to know who each other are. You ask us lots of questions. We don't ask you very many questions, but you've got to verify who you are. And then, those funds are with you very, very quickly. And Friday is payday, as a lot of you know. I'm sure, Jatin, you've been paid, haven't you? I know that for sure. Cooler, I hope you come and join us. You like Express? There we go, Jatin. Very good. I'm going to wrap up now before this laptop just crashes and I just end up getting switched off. So see you all tomorrow for CPI. Best of luck if you're still long in any of those trades. Let's have a look at where we were. Gold, wasn't it, initially? I can't remember what we're doing now. See, it's all just following the rules. It was 2-minute time frame, wasn't it? We were playing with on the gold market. Can't remember what we did here. There we are. We got out here, didn't we? And we left it running. We were moving it up. So we were in the money here. This is our first target. And then we, as I said, we were bringing the stop loss up behind us. So we would have been up and we'd have had our stop loss there at 52. And then this candle here would have taken us out. So that would have been our second take profit on that little demonstration there, guys. So there we go. There it is in real time. Real cash or real profits would have been made there from the entry there at 14.30. Our initial target hit at 14.42, and target 2 would have taken us out as, target 2, our stop loss would have been hit as we'd moved it up here at 14.58 because we've been following that up, and it wouldn't have been there then. We would have got it. We'd have kept it there. Once we got to this candle had completed, I would have moved it to here because we're counting back 2 or 3. We moved higher. I probably didn't. I would have saw that as where was it? Well, as a top. Well, it was 360, 360. We got through another random, and then it gave back $1 or $2 here at 360. So that would have taken us out there actually at 33. Is that 3? Yeah, 360.43 would have been our second target. And thanks very much. We're out looking to potentially go short now, but it hasn't played out. We haven't actually crossed that red line there, as you can see. Okay, Cooler, let's leave you with Cooler's message. He's just made another 2% on Euro. Thank you so much. Absolutely no problem, my friend. That's what we're here for. Best of luck. We'll see you all tomorrow. And take care. Have a great Monday. And remember, the prop trade is the place to be. Okay? All the best, everyone. Bye bye.